This is wartime, jets roaring over West Asia, missiles lighting up the skies over Israel, Iran and beyond. Oil routes under threat, diplomats scrambling, and on the trading floors of the world, panic. Because when rockets are fired, markets respond and crash. But when war breaks out and markets crash, who actually makes money? Most people assume everyone loses, markets fall, portfolios shrink, wealth disappears. But that's not how markets work, because when there is war, money doesn't vanish, it moves. And if you want to understand where it moves, you watch two things: oil prices and defense stocks. This week proved that again. Monday was calm, Tuesday was blood in the West, Wednesday was black in Asia. Indices plunged from Frankfurt to Seoul, yet in the middle of that crash, some stocks rose 4%, 6%, even 30%. So while missiles were being fired, some investors were quietly gaining. Here is how it unfolded. Monday, calm but calculating. The strike began over the weekend. When markets opened on Monday, there was tension but not panic. Oil prices began inching higher. Defense stocks started moving. Investors were watching. They were asking, is this contained? Or is this the start of something bigger? By the end of Monday, one thing was clear: selective sectors were already positioning for escalation. After the realization that conflict is going to be an extended one, Tuesday turned out to be red. Germany's stock market lost 5%, Spain 5%, Italy 4%, UK's FTSE 100 lost 4%, France 3%, trillions of dollars wiped out at US stock markets. It was a bloodbath across US and European markets because markets were now pricing prolonged disruption. Oil shock rise, inflation returning, energy supply insecurity. Investors hit the sell button. If Tuesday was blood in the West, Wednesday was black in Asia. South Korea's Kospi plunged 12.1%, its worst single-day fall ever. Trading was halted. Heavyweights collapsed. Samsung Electronics nearly 12%. SK Hynix about 10%. Across Asia, Korea's Kospi 12%, Thailand set 8%, Japan's Nikkei 2025 lost 3.7%, Australia's ASX 2%, Hong Kong's Hang Seng lost 2.5%, India's Nifty 50 lost 2%. Asia witnessed black Wednesday, then a partial rebound. Midweek, US and European markets recovered some ground. Why? US Treasury Secretary Scott Bessent signaled steps to secure oil flows. US President Donald Trump promised maritime risk insurance for trade through the Gulf. It provided temporary reassurance. But the bigger story was unfolding elsewhere. While markets crashed, some stocks surged because war does not impact everyone equally. When missiles fly, defense contractors rally. United States Lockheed Martin rose over 4%, closing at new all-time high. Its F-35 fighters, precision munitions and radar systems are central to the air campaign underway over Iran. The rally extended across the defense sector. Northrop Grumman shares jumped 6%, lifted by its stealth bomber and missile defense technologies. RTX Corporation gained nearly 5%. L3 Harris Technologies recorded solid gains. General Dynamics moved higher. Palantir Technologies climbed almost 6% because prolonged operations mean expanded procurement. And US President Trump has already said this could last 4 to 5 weeks or longer. Markets heard that. Europe followed. UK's base system gained 6%. Italy's Leonardo SPA nearly 3%. Germany's Rank Group over 3%. French Dassault Aviation gained 5%. Sweden's Saab marginally lower at 0.5%. Selective, strategic, profitable. In Asia, even as South Korea's Kospi crashed 12%, defense stocks surged. Hanwha Aerospace soared nearly 25% on Tuesday. Even after Black Wednesday, it remains 7% cumulatively higher. Lignex One jumped 30%, still up 19% cumulatively despite the broader crash, while tech stocks collapsed. Missile manufacturers rallied. Now the second set of winners. The Strait of Hormuz handles nearly 20% of global oil supply, and that risk sent oil soaring. Brent crude above $85, highest since 2024. West Tex US WTI around $76. Energy stocks surged. ExxonMobil up 4%, new all-time high. Chevron Corporation solid gains. Occidental Petroleum higher. ConocoPhillips advanced. Shell up in line with crude surge. Total Energies gained. Equinor up 8%. War Energy 6%. European gas prices spiked over 50% after LNG disruptions in Qatar. LNG exporters like Cheniere Energy saw strong intraday gains. The final picture: war destroys infrastructure, but in financial markets, it creates selective winners. When rockets are fired, indices fall, but missiles, oil and data systems make money.